Hey everyone, welcome to the vid. I hope you are doing really good today. And in this video, I'm gonna tell you how you can earn a passive income in Bitcoin and also hold a token which has the potential to have massive gains. Now, any project that pays out in Bitcoin is great because Bitcoin has massive potential. Obviously, there's the financial potential, but also the potential to create a monetary system which isn't broken like the current fiat system. After all, that's why Bitcoin was invented in the first place. In general, there are two ways that you can get Bitcoin. You can either mine it or you can buy it. Miners aren't anything new, and the issue with miners is that they're not really worth it for general investors like us. They're incredibly expensive to buy, they're really power hungry, and also they're incredibly noisy, so you can't just set one up in your living room. Greenblock Capital is a Bitcoin mining company that is democratizing mining to allow everyday investors like me and you to be able to mine Bitcoin. Greenblock Capital already has the miners and the facilities in place, and they're allowing us to get a piece of the mining action. They do this through their GBT token, which you buy, stake on the platform, and then you get the mined Bitcoin deposited directly into your wallet once a week. So you might be thinking, well, why do I need to buy a token to get Bitcoin? Why don't I just buy Bitcoin? And it's because staking the token will give you a continual stream of Bitcoin for as long as it's staked. If you just buy Bitcoin, you buy it and then that's it. The only way to get it again is to buy more. So essentially, through holding this token and staking, you're getting a continual stream of new mined Bitcoin. At the moment, they have 10 miners, which are run by a company called Miners Hub, and they have operations in Dubai and Canada. The Canadian one is run on hydraulic power, and the Dubai one is run on conventional power at the moment. So if you buy your tokens and stake them, how much Bitcoin can you actually get? Well, the amount of Bitcoin you get depends on two main things, which is how many miners are operating and also the price of the GBT token. Now, I spent about 2 hours talking with Lewis, who is one of the devs on Telegram, just to get my head around this. And I'll do my best to summarize it for you because it is pretty complicated. The only way you can tell what the APY is to log onto their site and see. And once you've staked your tokens, that's how much Bitcoin you're going to get regardless of the price of the GBT token. For example, let's say the APY is 120% and the token price is 4 cents and you get $100 worth of the token and stake it. That means in 1 year, you're going to get $120 worth of Bitcoin. If the token price doubles to 8 cents, the APY is going to reduce by half to 60%. Still giving you $120 worth of Bitcoin each year. If the token price halves to 2 cents, the APY will go up to 240%, still giving you $120 of Bitcoin each year. So once you're staked, it doesn't matter the price of the token, you will always get the same amount of Bitcoin. This is generally sort of how it works, but the APY is also affected by the amount of miners that are mining and also how much is staked on the platform. The only way for everyone's APY to permanently go up regardless of the price is for new miners to be added, because miners can only mine so much. This means that your ROI, or your return of investment, is going to depend on when you buy the token. And if you buy it at a higher price, then the APY is going to be lower and therefore your ROI is going to be longer. And also with the ROI, there's also the fact that your money isn't actually locked. So you can always unstake whenever you want and just sell the tokens. And with everyone wanting to get into this project, there has been a lot of buying pressure and a lot of staking. So already the APY is starting to reduce, but this isn't necessarily a bad thing. And let me explain why. More people getting in means more buy pressure, which means a higher token price. And whenever a token goes up in value, people always want to sell for profits. And there is a 10% sell tax attached to this token. And all of that sell tax goes to buying more miners. So more miners means more Bitcoin mined, which means more permanent APY increases for everybody else. The team have already bought 2 new miners from the sell taxes, and they hope to have 25 miners by the end of the year. And they created this graphic to sort of outline the whole ethos of their business model. And you can see here, more miners equals more hash rate. More hash rate equals more rewards in Bitcoin. More rewards is more value. More value means the price goes up. If the price goes up, people are going to want to sell. And from the selling, you can fund to buy more miners, which in turn gives you more hash rate, which gives you more Bitcoin. And so the loop continues. This is a pretty innovative project to include their own token on top of getting the mined Bitcoin. And the team is really experienced in mining because they've been mining since 2017. And in this video, you can see right now, this is of their 2017 operation. The team is also doxed and an audit has been done on the contract. So now let's have a look at some of the potential bad things. Well, there's obviously the complexity of figuring out all the Bitcoin and the APY and how much you're actually going to get and what you can earn and all this type of stuff. And it took me several hours of talking directly with a dev to rack my brains around all this. And obviously a general investor is not going to do this. So I really think the team needs to perhaps come up with a simple way on their website or somehow to basically try and simply explain exactly how the APY works and how much money you can expect to make for your investment. Also, if people are getting free Bitcoin by staking their tokens, then why would anybody want to sell their tokens and stop getting the free Bitcoin? And obviously, if nobody's selling, then there's going to be no sell tax, and so no more miners can be bought. And Lewis pointed out to me that whenever a token goes up in price, then people are going to want to sell. And this is actually evident. If you look at the chart here, you can see there are a lot of sells happening. In fact, there've been so many sells, they're able to already buy 2 more miners. And the team predicts that all they need is about 33% sales in any year to get them about 8 extra miners per year. Also, there's the fact that this project is basically an experiment because as far as I know, there's no other projects using a smart contract to give out Bitcoin mined rewards. So with anything new, there's an inherent lot of risk because we just don't know what can actually go wrong with it. But everything so far is looking good, and this project has only just launched, so it is going to take a little bit of time to see any significant gains in the token price or the Bitcoin rewards that are mined. But it is a solid project, and it does have a token which has a simple but really powerful utility. And if you do want to get involved with the project, then all the links are down below in the description. And I'd love to know what you think about this project. Please leave a comment. And for those of you that have made it this far and stuck around until the end, then total kudos and congrats, because now you can go into the draw to win 50 BUSD, because this is a sponsored video, and any sponsored videos that I do, I give away 50 BUSD to one of you. And a big congratulations to Nal, who was the last winner of 50 BUSD. And all you need to do to enter is you need to subscribe to the channel and just leave a comment with somewhere in there the word orange. So I'm going to filter the comments by the word orange, and I'll pick the winner in a few days' time and let you know. So best of luck, and until next time, I will see you all in the next video. Bye.